Mutual fund ratings are completely useless. Let's discuss in detail why they are completely useless in this episode of Market Secrets Investment Series. You will find a lot of papers, sites, blogs, YouTubers screaming their heads off about 5-star mutual funds. Even some of your friends would have recommended some mutual funds to you saying it is 5-star rated. We can discuss why these star ratings are completely useless and what are the disadvantages of using star ratings to invest in a fund. To understand that, first we need to know how the mutual funds are rated. Risk adjusted return is the parameter used by most rating portals, which includes a lot of mathematics, usage of exotic terminologies like downside risk, utility function theory, risk aversion, etc. Then they compare monthly weekly returns with the risk free returns and assign downside risk and excess returns. Risk free return in the sense your savings bank account rate or the short term FD interest rate. Then all the funds of the category are separated into different star groups and top 10 percentage are awarded 5-star ratings and the next 20 to 22 percentage are rated as 4-star ratings and so on. So this is how the rating happens. The most important thing you should note here is they can give any weightage in terms of percentages to any of the various parameters, which is a major red flag. They can tweak just one small thing in the weightage and the rankings can go upside down. All these ratings are purely quantitative without any subjective component, but it overlooks the most important factors like fund manager. Even if the fund manager leaves, there will be no change in the rating of the fund. Even the complete change of the entire management team does not change the rating of the fund. This is another red flag. And lastly, once they arrive at the ratings, then these star ratings are disseminated to people in various forms and advertisements. And people flock to the 4-star and 5-star rated funds. Now, what are the problems with mutual fund ratings? Is it not better to use 4 or 5-star rated funds than to use low performing funds with 1 or 2 stars? Yes, selecting funds on basis of stars can be a good start since most of the long-term decent funds are 3, 4 or 5-star rated. But the problems are the ratings are calculated every week or every month as per the category. So it is possible for ratings of individual funds to change every single week or every single month. So a person who invested in a 5-star rating fund on Friday may end up seeing his fund changed into 3 or 4-star on the Monday. In star rating system, there are no subjective criteria which makes comparison of the performance of the same fund under different managers or management teams uncomparable. There is no weightage for good manager or good management. The biggest problem is a 5-star fund may not remain a 5-star fund 2, 3 or 5 or 10 years down the line. That is the day you will be withdrawing your money. Ratings are purely based on the past data, but the past performance is not an indicator of future returns, which means ranking based on the past returns cannot tell you if the 5-star fund will remain a 5-star 10 years down the line. Likewise, a 2 or 3-star fund will become a 5-star fund. All calculations of alpha, beta, standard deviation, volatility based on the past data cannot tell you future performances. So if the 5-star fund you are invested in today changes into 3-star fund after 2 years, then what are you going to do and how will you cope up with that? And lastly, comparison of different style of funds like value funds with growth funds does not work since they are not comparable at all, even if their benchmark and portfolio capitalization are similar. These are the problems with mutual fund ratings. They just go with the quantitative approach. They will not look into the qualitative aspects or subjectivity. So how to proceed further with selecting mutual funds for investment? Look beyond the quantitative performance of the funds and do some qualitative analysis. Understand the fund company behind the fund. Have they been able to retain their management teams? Are they able to generate profits for themselves? If they are not, then it will be difficult for them to retain their teams for longer period of time or sustain themselves, both of which can prove harmful to you. Is the fund manager been with this fund for the last 3 or 5 years over which the ratings have been generated and which has attracted you to it? Is the style of the fund consistent over these time periods and can you stomach that style? Value funds can have longer periods of relative underperformance followed by great outperformance as compared to growth funds. Similarly, large cap funds will have lesser volatility than a small cap or mid cap or even multi cap funds. So these are the three things that you should keep in mind while you select mutual funds for investing. Even after selecting funds across these parameters, if the fund ratings drop, then you just need to check whether the fund team is still consistent in their approach and their underperformance is because of the market cycle. In that case, it will be more beneficial to accumulate more units of the same fund, which will help you when the fund regains or upgrades its ratings. Remember, you make most of your money in the bear market. The only problem is you do not know that at the time. So you need to trust the funds that you are investing in, and for the trust to develop, you need to do some groundwork instead of just following the star ratings. The star ratings are at best a lagging indicator. It can measure what has happened, and that might be very different from what will happen after you invest. So do some qualitative analysis on your fund well before you invest in that. So to put it short, mutual fund ratings are completely useless if you are following that blindly. You need to put in some effort to do the qualitative analysis as well. This brings us to the end of today's episode. If you have any queries or feedback about this episode, please drop it down in the comment section. We'll be happy to address that. Hit the like button if you have liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.